Hi, this is Akmir with the weekend edition of the Bulletin Board Heroes here at Box Markets. It is Sunday, the 15th of January. Starting off with the FTSE 100, where we've got progress within this rising trend channel, which has been in place since the end of October. We've been getting excited about it since the end of November, but the real excitement came at the end of last month with the Golden Cross buy signal, and that has actually panned out quite well. That came in around the 74.70 area. Obviously, there's been decent upside since then. We were looking for 8,000 or towards 8,000 by the end of next month. It looks as though we might even get that if we're lucky by the end of this month, just to try and throw a pie in the face of the bears. Let's see if we can do that. In terms of near-term price action, initial resistance this month around 77.40. So above that, we're looking for the 8,000 area. Below that, 76.30, 75.50, and then the worst case scenario would be a return to the 50-day moving average in the floor of the rising trend channel at around 74.75. Had a little continuation buy signal there in the RSI window, so we broke that line of resistance there from December, but obviously we are rather overbought at the moment after recent rises. Moving on to the DAX, which is a decent situation as well. Here we've had that extended consolidation at the floor of that rising trend channel from the end of September, beginning of October. That's normally a decent signal as well, in the sense that there was bounces for the market off that rising 50-day line. Broke the neckline area around 14,200. We had then 14,600 as the next area, which was November-December resistance. And then finally 15,500 we're looking for by the end of next month, although the way things are going, we might even be able to get to that area by the end of this month. But 14,600 support and 15,500 the target there on the DAX, which would take it back to where we were at the beginning of last year. So we're not exactly we're not exactly in the stars or too high at the moment. We've just made up the lost ground for last year. Moving on to the Dow, and here I suppose this is the laggard of the three that we're looking at on the index front. Here we're still trying to get up to the old November-December resistance area around 34,600, looking for 36,300 as the big target by the end of next month, and hoping that this market stays above the area of the 50-day moving average around 33,500. Similar pattern to the DAX with multiple tests of the rising 50-day moving average leading to the breakout that we've had, and things looking relatively settled. If you're hoping that this market will play catch-up on the DAX and the FTSE, there is some evidence for that, because this is the least overbought to the RSI. They're just around 62, way off the 70 overbought area. Next market is the star market of the moment, which is something that one has not been able to say for quite some time. Here we've got Bitcoin. The start of the improvement came with the bullish divergence there. We had that lower low there back at the end of November, but a higher RSI, so that was the first signal. Second signal, that gap to the upside at the end of November, so that did basically establish this rising trend channel that we've had. And we had that long crawl along the floor of the channel and the rising 50-day moving average earlier this month. We've broken the top of that channel now, which is very pleasing, and also we have gone above the 200-day moving average at 19,500, which is the first time since basically the end of March, April, and early April last year. We were suggesting before that if we break the 200-day line, the fear would be that that would be a sell point, but obviously the way that things were spiked up, it looks like we are going to keep going. And above the 200-day line, 19,500, we've now got a best-case scenario target as high as 30,000 by the end of next month. If you're more conservative, you'd be looking for, I suppose, August resistance around 24,000 as the next target while we hold above the 200-day moving average, but only while we hold above the 200-day line. If we get back below that, then the support there below 19,500 is then around 18,200, which was the old December peak. Moving along to the stocks, and starting off with Andrada, which used to be known as Afritin. I like the name Afritin, but obviously they've changed it. Here we've had, rather like Bitcoin, a break through the 200-day moving average for the first time in this case since June. And the initial target here, the top of that triangle from July, as high as 7 pence, ideally by the end of this month. Support looks well established in the 5p area. That was initial January support and old December resistance. So above 5, looking for the shares basically to improve on Andrada. Onto a stock which has been on the back foot for a long time, but it looks like its time's finally come. We had that break of that resistance line in the 50-day moving average at the beginning of November. Bit of shuffling around since then, but we bounced off a rising 50-day line at the end of last month after a one-day bear trap, and I think if you look closely, we even had a gap higher, unfilled gap to the upside, which is one of our favorite signals, largely because they tend to work, and that's why we're going for a target by the end of next month as high as 2.5p, now that we've broken through the 200-day moving average. So basically above 1.4, maybe for fussy, say 1.3, we're looking for 2.5p on Asiamet, and I hope the shareholders finally get a decent bull run. On to Drumz, which has basically been a decent situation since the summer. A lot of consolidation over the autumn, but we finally broke a line of resistance there from October to end last week. Also closed above the 50-day moving average at 0.9, and therefore we're looking for the top of that rising trend channel from back in the autumn of last year, as high as 1.2p. Maybe a bit more, actually. Maybe that line's a bit low, maybe a bit higher than that. So above 0.9, looking for as high as 1.2, 1.3 over the next 4 to 6 weeks, and hopefully a bit sooner. The 200-day line rising very nicely over recent months. Moving on to another stock which is looking as though it's back on the front foot, if that's not a horrible way of expressing things. Here we've got First Tin. And here you can see that we've had a decent basing for the shares over the last few months, basically over the course of the autumn. That big break of the 50-day moving average after the bear trap below October support, that was around the 9.5p level, really did the trick, and had a little breakout there through the initial January resistance at 12.2p. Above 11p, looking for the upside to continue, and maybe get initially up to 15p, which is the 200-day line, and maybe on a 1 to 2 month view up to 23p. But pretty excited about that turnaround there, which is really like an inverted head and shoulders, a sort of complex one. And let's see if First Tin comes up with the goods while we're above the 10p area. Next stock is Immupharma, which I've included partly because of the recovery in the shares, but also because we've seen many life sciences stocks improve to start 2023. Here we want to see basically a break of that initial January resistance around 2.8p. If we can get that over the next week or two, then we're looking for the area of the top of that triangle from back in September as high as 5.5p over the next 1 to 2 months. So basically looking for the shares to double on that basis. So a bit of punchy call, but let's see if we can do that. The stock which has actually finally obeyed the charting message has been Jubilee Metals, and here we were looking for a bear trap, narrow bear trap below the November support there towards 10p to deliver a turnaround. We had bullish divergence, or a bullish divergence line there since September, so it was we were waiting for a turnaround for rather longer than we expected. But the initial target here up towards 13.5, 14p, almost exactly hit the line there on Friday at 13.75. Above 13.75, then we're looking for 17, which is a resistance line there from the summer of 2021. So it looks like finally Jubilee getting its act together within that broadening triangle from basically 2 years ago. This stage only back below that broken resistance line there around 11.5p, really killing the idea of a decent turnaround at Jubilee. On to Kefi, which did good stuff back in November, breaking the 200-day moving average on a sustained basis. There was a brief bear trap dip below the 200-day line last month, below 0.7, but looks like the 200-day line now at 0.7 is back in business as support for the shares, and we're in a rising trend channel from June, which above 0.7 could take us back to a penny as soon as the end of next month, and ideally even by the end of this month. Rising 50-day line as well, which should help the cause over the near term. On to KR1, which I haven't looked at for quite a while for obvious reasons. It hasn't been doing very well, but last week a big turnaround week, and one suspects that referring back to that Bitcoin chart, there's going to be a bit of a revival in all things crypto and crypto related. KR1 broke the resistance line there, August resistance line, and the 50-day moving average the end of last week, and we've even closed above the 200-day line for the first time in looks like a long time actually, the autumn of last year. So pretty big significant technical development there, and the view now is that at least while we're above the 35 pence area, looking for as high as 75 pence at the top of that broadening triangle from the summer. Bullish divergence line there as well, so this could have decent momentum, and that's why I draw those lines in the oscillator window. If you're cautious, I suppose you might wait for any dips towards the upper 30s there, but it looks as though we're already on our way for KR1. On to a stock, another stock which is not looked at very much here, Metals Exploration. Here we've had a decent break as well. In this case, we already had the bear trap rebound from below 0.9 back in November. And the situation now is that we've broken a line there from the autumn of last year. That was around 1.35 pence, and above that we're looking for the top of the triangle there from the summer of last year as high as 2.25 to be hit by the end of next month. Moving along to another life sciences situation, Oncimmune, and here we had the turnaround there, bear trap from below the September support there at 52 pence. We've had an unfilled gap to the upside over the last week, which is nice. So even though it's a very illiquid stock, but still an unfilled gap to the upside. A break of that March resistance line from last year at 71 pence could take the shares up to £1.20 as soon as the end of March. We've got an initial target there at the 200-day line at 80 pence for those who are more cautious of this situation, are worried that we might then just slip back after hitting the 200-day line. But we haven't been above the 200-day line since the summer of last year. Nice recovery in Pensana over the last couple of days. Here we basically had a triple bottom there in the mid-40s, broken a line of resistance there from October around 50 pence at the 50-day moving average, and above 50, looking for 62 pence at the 200-day line initially, but then maybe by the end of March as high as 90 pence off the back of a very steep bullish divergence line there in the RSI window and the triple bottom, which suggests that the shares have done enough testing for support. One of the stocks I can see on Twitter of the weekend is Premier African, and probably quite right there with that break of that triangle that we've had recently. We had a bit of a flush out there towards 0.4 pence last month, but the overall pattern here is a rising trend channel from the end of 2021, top of the channel there at 0.7, and really now well above the upper 40s, so 0.7, 0.47, 0.48. We're looking for 0.7 as soon as the end of next month. Nice sharply rising 50-day moving average as well, and a break for the RSI through the neutral RSI 50 level as well. On to the last three in this marathon session, Touchstone Exploration. Here we've had a gap close buy signal there, which we had on the 5th of January. Bit of consolidation on the 50-day moving average. They're at 65 pence, above 65 pence. We're looking for at least 85 pence over the next few weeks, and that was an unfilled gap to the upside on Friday, so that really completes an island reversal, so gap down and then gap up. Could be a very strong move there for Touchstone over the next few weeks. Couldn't resist looking at Upland again, largely because I've widened the rising trend channel, which I'd drawn previously. So previously the trend channel was pointing at 0.9, but then looking at it again, I thought this deserves an upgrade to 1.1, perhaps as soon as the end of March, maybe even sooner than that. And the upside valid there while we're above the 0.6 pence area, maybe 0.65 if you're more aggressive, but very decent looking chart on that upside there. It looks as though it could be achievable relatively soon.